There we go. Hopefully all is good now. Should be perfect. Got a little gremlin in the deal there. I was just saying, I hope you've come off the, the Valentine's Day cookies and whatnot. They're officially gone in the house. The candy's still there, but the cookies are gone. I took care of the cookies now for you. Hey, we got Wine and Wealth coming up here tonight. If you're one of our clients, and I hope you consider us there. We have so many people that have come from other larger advisors that have said, man, you guys do so much more than the average advisor out there. One of those things is Wine and Wealth. I was just saying, we're doing that tonight. That'll be at 8 o'clock Eastern time. We're talking about covered calls for extra income. I really want to focus on how the process works, not just like a basic explanation of it, but what happens as the stock moves around. And here you thought you sold a call and you're going to make some income. How do you know when you're in trouble, when you're not in trouble? What are the risks? There's really not any risks there, but we're going to go over that and probably do it right here. Try to give you some examples and such, so I hope you'll join us for that. As far as the stock market goes here today, I find it was very kind of an interesting yet obvious day. You know, given how we've seen the first part of this year play out, it was very obvious to see what was pulling the market down lower here today. We had producer price index, or PPI. So remember, we just had the CPI, which is the consumer price index. What do we pay and how have our costs gone up, which they did. And now we today had the producer price index, which is what is the extra cost of the producers of the stuff that we buy. Well, has their cost gone up for raw materials and input costs and such? And well, that did. That went up by about 3 ticks there, and they have a core PPI as well. That went up by about 2 ticks. We also had the housing starts that came out and building permits. They were down. They were below expectations there, but that's not really a shocker because we know the housing market has slowed. The Fed wants the housing market to slow, and it's happening, right? So it's not a big deal. That really wouldn't pull the markets lower. And in fact, the PPI numbers didn't actually pull the markets lower. You know what did it? And I'll just kind of pop over here so you can see. Pull back basically to erase everything that we had tallied up throughout the month, right? So we're back negative for the month. But what really did the trick was while we were plugging along, can I do it this way? Let's try like this. Here we go. So we're just plugging along. We're doing our thing today. We started weak and everything's like, okay, well, we're trying to recover. Here's the beginning of the day going into the lunchtime hour. And then coincidentally, at the exact same time, but in different locations, you had 2 Fed members comment that they would be okay and would support a half-point rate hike based on the data that's come out. And that's this right here. So right as that came out. Now, don't you find that a little bit odd that coincidentally, at the same time, give or take a minute or two, that headline hit, and these 2 people were not sitting next to each other saying, well, I agree. Yes, a half a point would work. But no, they were over here, right? Don't you find that interesting? So the Fed starting today to set the tone for the possibility of that half-point hike, essentially trying to scare the markets just a touch there, slow things down a little bit because we're not slowing down our spending. And so you ask yourself, okay, well, that news came out. What stocks is that not good for? You could probably guess. If you've been watching the show here, you know for sure what stocks those would hit. It hits the big 8. In addition to semiconductors as well, and all the other tech stocks that really have no impact on the market as much as those do. So immediately, we have names like Microsoft just starting to sell off. Oh, that's not going to work. I'm sorry. I typed the wrong thing there. Microsoft. So we start getting a sell-off, which was already weak on the day. Well, that stock's been leading the market higher. Remember what we talked about before, where there's only a certain group of stocks that are leading the market higher? And wouldn't you know it, Microsoft's on that list. So what'd we say? When those 8, in this case 10 stocks, have a rough day altogether, we now know that that's going to pull the market down. So really, we just have to watch these stocks for the moment. That's all we would have to look at. Well, today, that actually did the trick. So when you look at those names that are on the list, I'll go with Amazon, since that's been a bigger contributor to this year's gain so far. Down on the day. Meta, down on the day. We don't have to go through all of them, right? Let's do all this. Meta, down on the day. I would otherwise argue it's a pretty nice pullback. Apple down on the day, Tesla down on the day. You get what I'm saying? Alphabet down on the day. And so those stocks that were assuming that the Fed was nearing the end of their rate hikes, obviously were gaining. They were doing really well. uh-oh, we have two Fed members in two separate locations, both saying basically the same things there. Well, that's going to hurt those stocks. So that's a really simple way to see what's going on in the broad market. And that will continue until we have some other clarification. We don't have earnings coming out for these names that are going to just make things blast off again and somehow pull the markets higher. So for the moment, you would assume that until further notice, right, something that has to do with hikes or some other Fed member saying, no, that we're not doing that, you have to assume that the market is in now that, oh my gosh, maybe I shouldn't be taking risk mode, right? And that's what's going on. If we look at the Dow, same thing's going to happen over there, although it's not so interesting with the Dow because we're just moving sideways. So it's just back and forth inside of a range, not too big of a deal. You could imagine that the NASDAQ was one of the bigger ones that was hit today. It was the biggest loser, 1.9% versus the worst being 1.4 with the S&P, second worst. And that's because all those names, those 4 and 5 ticker symbol names, are in the NASDAQ. That's not as true as it used to be, but fun fact for you, it used to be that 2 and 3 letter symbols were in the New York Stock Exchange, and then 4 and 5 letter symbols were in the NASDAQ. That's kind of an old guy stat for you at the moment, but that's no longer true. So the NASDAQ, of course, getting hit in the midst of its pullback as well. You have to assume that that's the start of the pullback until proven otherwise. And the Russell 2000, not as bad there because small cap value continues to have a little bit of oomph, right? Those small cap biotech stocks that have been beaten down, small cap like AI-ish kind of stocks, they're continuing to see a lot of momentum. And so that's helping. It's, it's not perfect, but that's what's going on there. Now, year to date, right, for the longer term investors, we still have a 6.5% rally in the S&P. That's still above average for this time of year, being so early in the year. But we now know that it all came from January. We now have a negative return over the course of February here so far, so fading away ever so slightly. The NASDAQ still maintains top spot there, 13.74%, so a pullback is welcome. If we find, and this is just a little off topic, but if we find that this is a whole lot of nothing, right, that we're cool with a half-point rate hike, and okay, but that's as bad as it's going to get, then you find a reason to say, well, the pullback in the NASDAQ is viable, right? So maybe something to focus on there. What I'm going to do, since we now know this, what's the action plan? Imagine you're us at Jazz Wealth. We manage just over $250 million of client accounts. Imagine you're me. You have to make a decision, right? We don't hire other fund managers or buy mutual funds or anything. We have to make decisions about our portfolio. So what's today's action plan? Do we do something? Do we do nothing? Or do we prepare to do something? And right now, where you stand, even if you're just building your own portfolio, you are in a prepare to do something mode. There's no action to be taken. You certainly don't want to walk away. It's kind of a poor time to walk away from the market, but you do want to prepare to do something. So what I thought I'd do today is, without making recommendations, I would just go through examples of what you might look for and show symbols that are showing that as an example, but I'm not telling you to go buy them. I'm just saying, you may want to look. So what would you look for if right now you said, I think maybe the markets are in pullback mode, and I have to believe that until proven otherwise. So what do I want to do? Do I want to buy, add to a portfolio? Do I want to add really, really cheap stocks? Do I want to add weak stocks? Do I want to add stocks in the Dow that are going sideways? Do I want to focus on sectors that are pulling back more than what the market already has? Do I want stocks that are outperforming the market and just maybe they're pulling back now? Do I want stocks that are super extended and have just so much strength it's incredible? So you ask yourself those questions. There's almost no right answer there. The wrong answer would be to buy something that's going sideways. If it's dead money, why are you committing to it? You might have to have a pretty serious belief that something's about to happen. So I'm going to take the approach today, again, not a right answer and certainly not a wrong answer, but I'm going to take the approach that I want to find stocks, so you could set a screener or something. I want to find stocks that have outperformed the market, meaning the performance is better than 6.5% year to date, but that they're pulling back, right? I don't want to find a stock that's up 12% and it's at its highs. Now I've got to wait for it to pull back if I want to buy a pullback or find a better entry or something. That'll just cloud up a watch list. So I want stocks that are outperforming the market and have already started to show me they're taking a break. they went a little too far too fast, and now they're starting to take a break. I would also like to have some diversity. I don't know if transports are going to be the way to go. I don't know if industrials will be the way to go, or if tech will come back, or if financials get all the excitement. I don't know that just yet. And that's okay to say, I'm not sure, but let me prepare. So let's go over here. Here's an example of what I'm talking about. So this is going to be in the transport space. Old Dominion, you know about them. We actually covered this on the Jazz After Dark last night there. So I don't know, how do I want to say it? I don't want to focus in one sector, so I'm going to bounce around a little bit. But I do know that this stock is outperforming the market. And I do know that it's starting to pull back. Right? So this, I can't tell you is the right spot to buy it. I don't know if it is, but I know that it's working on pulling back inside of a strong move, right? Maybe with what they're doing with their money and what we talked about last night, maybe this is an idea. So I don't have to wait forever to find out. So Old Dominion Freight Lines will be one of them. If you like semiconductors, all right, it's a little tougher over there, but I'm trying to be diverse. So here we're outperforming the stock market year to date again. I'm not going back further than that. So outperforming year to date, but we've already started to pull back, meaning I don't have to wait 3 weeks to find out how far it pulls back. I've already got something that may be close to an opportunity should things change. Got to throw in Disney. We know Disney's outperforming. Communication services, best sector out there, or was. So it's outperforming, but it's already started its pullback. What happened to Disney? It got a little too far ahead of its skis, right? Who says that? Is that Biden? Does Biden say that? It's like someone's favorite saying. Who am I thinking of? Got a little ahead of your skis there. I don't know. Anyways, yes, it got ahead of itself. It's already started to pull back, showing that it needs to take a break. Remember, stocks breathe in and then they breathe out. Right? It's just a simple way of saying it if you're going to teach a kid. And so we're breathing out at the moment. Does that mean Disney's a horrible stock? No, it must be doing something better. It's already been outperforming the stock market. We know parks are busy. We just went through all of their earnings and everything, and we talked about that. So we know that at some point this is an interesting idea. It goes on a watch list. There are a couple financials. Capital One being one of them. See how all of this looks the same? We're outperforming, but yet we're pulling back. It is called a bullish pullback. It is not a stock that had a little bounce in the middle of a downtrend and has started pulling back. That would be quite weak. The stock is already weak and for whatever reason had a little relief rally. Why do we want to guess that that's the bottom? Here we have a stock that's already made an interesting bottom, presumably, and it's starting to pull back inside of that new bullish move. And for that, let me just throw in Discover as well, because it's a similar look. See? Got ahead of itself there, too far, too fast. Stocks don't like to do that. It's retreating back to its average. And I would argue, today's not the day to be buying something like this, but it could be an option. Now, these could all be horrible ideas, but we're putting together a watch list. You may flip the script a little bit and say, great, I'll look at some of those. I like that concept. But I'm also going to look at value, meaning stocks that are trying to make a bottom, and I don't know if they've kind of made a bottom yet, but it looks like they're trying to do, technical traders call it a double bottom. Maybe, I don't know. You put a list together of those, 5 or 6 names, right? So that way, if what happens here turns out to be a pullback that just, essentially crashes, well, then you're not stuck without a list of things to go to. You've got somewhere to look. So Prologis, right? You're getting into the REIT space there a little bit. Looks the same. Let's hop on over to an airline real quick, just to show that there are plenty of industries you could look at. If there are some things you don't believe in investing in, or you just have no interest, like I'm a biotech guy. I don't care to invest in biotech. But, I'll skip that, move on to something else. And so there you go. We got Alaska Airlines doing the same. I believe, is it Southwest? No, United. I think it was United. Yeah, United's similar, just still a little bit overbought, right? It's not really pulling back, it's going sideways. That could be interpreted as more strength or stubbornness to finally sell off there, which falls into the strength category as well. That one wasn't really pulling back, so I said, well, let's not include that. But Alaska Airlines, of course, you see what I'm saying. So the lesson of the day is it doesn't matter if you believe in this approach or not. It's just a way to say, how do I set up a screener? How do I go scanning through the market and find something that will focus my attention when the timing is right to start adding positions? And yeah, that was a mouthful there. Wine and Wealth tonight, covered calls. I tell you about that. We had some great classes, actually. We do that for clients every week. Sometimes they're interesting. Sometimes they're just updates. But every week, I like to come to clients 2 times. The first is through a class, if you want to come hang out and ask questions. The second is through a weekly email that we actually write here. We don't just like copy and paste from some third-party email financial advisor service. You know, there's a lot of those. So anyways, enough of that. Moving on. Stocks in the news, just a couple of them here, and then I'll take your questions. Cisco. You don't normally see large moves out of Cisco, but when they happen, we got to talk about it. They beat on earnings, beat on revenue there. Their guidance was 100% higher than expected. That'll get your attention, and has obviously gotten some attention. And when I dug through it, the reason why, their words, not mine, they said, well, thanks to having a healthy backlog and the adjustments we made previously to account or to have more supply, we were ready to meet that demand. We haven't heard that a lot, right? Maybe Peloton could learn a thing or two from them. Equinix. So this is a data center REIT. So here's an example of a REIT where they're not investing in an apartment complex. This is not their deal. They're not investing in hotels or whatever, but it's still considered a REIT because it's a storage REIT, essentially in the digital sense there. Beat both on earnings and revenue there. I wanted to point this one out because they were one of the first to say it. And remember, we're going to be seeing this. They said, we had a $267 million FX tailwind that started at the end of the quarter. Remember, we talked about that being something, and that's because the dollar started getting weaker towards the end of the quarter, meaning the conversion rate was tighter and they didn't have to, you know, there wasn't so much loss to slippage there. They also said, there we go. They also said that the Forex tailwind, even though it was $267 million now, it should be about 15% more in Q1. So I always love when we teach something ahead of time and then we go back and see that that actually came true. I always like to say I'd rather tell you ahead of time than tell you I told you so. And so I like that. Marathon Petroleum beats on earnings by 5%. However, they sold 7% less than what they did in the previous quarter. So they beat by selling less. The higher earnings, less sales. How could that be? Margins, right? They got high margins. They've got a lot of fluff in those margins they can work with. And then the key word there is they reiterated. They made the point to use the words reiterate. We are reiterating to our shareholders and to the government, really is who they were talking to there, that 40% of our free cash flow will be returned to shareholders in the form of dividends and in the form of stock buybacks. So that was a big slap to the White House saying, we're going to continue. If you take about 40% of their expected free cash flow, that's $1.8 billion that they are saying, you know what? Big middle finger to the new rules that, which is not actually a rule yet, but the rule of the 4% tariff, 4% surcharge on buying back shares. They said, we're calling your bluff. It was actually a nice beat for them. Oh, right here. There you go. I'm back. Is the mic? Might have been the mic there. I see we're good. Okay. Zillow was actually a nice beat though, but how do you do something with Zillow? You know what I mean? Like, how do you know the housing market's slowing, you know the number of listings, you know the number of rebates they get from realtors, it's all less. It's a tough one there, but nonetheless, they beat. It was pretty good there. Visits to the site were down 5%, and so I'll move on. Good? Good. We're good. Roku, I'll point that one out. So had the right idea, just the wrong year for the stock pick of the year there. Good earnings for them. Average revenue per user beat expectations. That's a great sign. You would do the same for, you think about that for like Netflix or AT&T, so that's one of their metrics. Streaming hours, the number of streaming hours beat, and that's because for the last year, I have been turning on Roku at night, and I just let it stay on all night, just to up those hours for them. And total customer accounts beat, and I have not tried to manipulate that number for you. I literally do watch Roku every night. We don't have cable or anything. Haven't had it in a while. Lots of great reruns and stuff there. Okay, Jazz After Dark. Last night we talked about how to manage your money like a public company. This week we talked about how to get more out of Social Security. Tonight, still doing it tonight, we're talking about approaching funding your child's college from a few different angles instead of just being basic. And I'm going to review each thing so you know what we're talking about first, you understand how it works, then why would you use it? Then we'll go on to the next thing. This is how it works. Why would you use it? Okay, you still want to pay for your kids' college? Okay, let's go on to the next thing, a little more sneaky, a little more tricky, and explain how it works, and then we'll go through it there. So I will be doing that at 7, Wine and Wealth at 8, and I'll try to take your questions here now if I can. Sorry about this little wire today. It's a little bit loose today, apparently. All right, I'll take your questions. Let's see what we can do here. Oh, yeah, talking to each other. Who has cable these days? That's right. You should just be watching, YouTube, Jazz Wealth. So hard to convince your wife that low interest debt is a good idea. And well, Chris, I'm not going to get in the middle of that. I will say, you do what you got to do. You guys talk about it, and whatever you decide, I will support. I will not be getting in the middle of a spousal dispute there. Remember when you could borrow 100? Yeah. Yep. Hey, welcome to that age group now. You guys are all living through it. One day you'll say, oh, remember when gas was 99 cents a gallon? I actually remember that and the location of it. Now you guys got one. Remember when you could borrow money for like nothing? That was great. You just do whatever. Yep. 3M, same comments as before. Nothing has changed with 3M. So I'm not sure if that was you that asked there, but nothing's changed in terms of why would you want to buy it? You have one thing that you could look at, and it's your bet. You can bet that the prior low is going to hold if it falls. I have nothing to suggest that that's a good idea, but technically that's all you have left. Otherwise, what do? Let's say you're like, I got to buy the stock. I want to buy it. I just want to know when. Well, you have this little downtrend here. Wait for it to break and buy the next pullback. Yeah. Yeah. Oh, well, you're getting your pullback in Microsoft, Alex, so that's a good thing. So today was a good sign. You like the idea that that's happening. You expect that that's going to continue. The Fed is the only one that can now change their minds and come out, like I said earlier, and say, nope, just kidding about the half point. How to take advantage of employee stock purchase plans. I believe Eric did one of those. He is our ESPP guru. But yeah, that's a good topic, actually. Yeah. Did he already talk about rolling out of the money covered calls? I didn't talk about that today. I'll be talking about that tonight, but I did not say today. There's another one with the eggs, the stinking eggs. Prices have come down. If you look at the wholesale price of eggs, they have plummeted back to almost normal. So that's good news there. Fed members advocating for 50 basis points. Even voting members, do you believe they will hike 50 basis points? Well, it's early to say, but today having them conveniently go and together, two of them, Bosticks and I think it was Meister, right? The lady. Having both of them happen to say the same thing at the same time in different places, that's gotta stick out to you. Dale, I missed your question, man. I'm sorry. It's a little blur on the screen there. Natural gas. Why do you want to buy natural gas? What's going to change there? You can't see it. What's going to change with natural gas? What sort of supply issue do you have? None. What sort of seasonal effects do you have? We're getting towards the end of that there. So if you're expecting something big to happen, what's going to cause that? What's going to cause that, huh? Yep. Hoping to buy an adult foster care home. Oh. Property and stop rent. Oh, okay. Well, that's unique. Well, you do have your prices falling. However, now I'm a little biased because here in Florida, they fell rather quickly and then they stopped. So they didn't fall much, but they fell quick. And now if you look at house prices, I literally love tracking this stuff. They've flatlined. So I don't know if that's a pause for the next leg lower. I don't know. But right now, because I'm looking more at Florida prices, I go, that's kind of a pause. I probably shouldn't do anything. Yeah. Politics, yeah, you could certainly use politics, especially with what's going on around the world for natural gas. But that's a political risk for a political reward. So you've now disconnected yourself from the normal ebbs and flows of an underlying product, and you're hoping on a comment or something. So, that's okay. You can have that belief that that's going to happen, but that would be outside of the things that I could advise on. Yeah. Okay, so when you look at things like UNG, I just want you to do a little homework there. How does the price of UNG present itself? What dictates the price of UNG specifically? It's a proxy for natural gas, but how? And when you find that second step there and you go, ooh, I see how this is happening, is there not a natural drag on the price of natural gas as you see it with UNG, not natural gas as a whole, but UNG? So does that still keep you excited to buy something that's at lows and not moving? Because what's going to happen at the next futures expiration is it's going to tick lower, especially if there's no news or anything. So one extra thing, when you're playing with those proxies, you got to keep that in mind. It's not so bad. It used to be really interesting on USO, but then they screwed the whole thing up. GLD is another one. It's gold, but it's how is the price of that GLD moving? Gold futures. When gold futures roll, is it currently costing you money, or are you earning money to roll it? Or are they? You're not doing it, but extra layer of geekiness there. Yeah. Any recommendations for a small mid-cap pharmaceutical ETF? No. Yeah, the only ones I have followed would have been IBB, but that's not going to fit what you're looking for. Other than that, that's not my space. Bad taste in my mouth. Tastes like the money just flowing out of my wallet, and that's why I don't like biotech and the small pharmaceuticals. Doc remembers the rant. Yeah, that was upsetting. That was very upsetting. But it's what it was. All right, I got to get ready for Wine and Wealth tonight. Jazz After Dark. If you're not a client, you want to still come and learn something, we'll see you later. I appreciate you guys hanging out with us here today, and enjoy the rest of your evening.